We have a quick question here from Asanka asking which currency pairs are usually affected by month end or quarter inflows. Is there some pattern that we can use, and how can we use this info in our trading? So, thanks for the question, Asanka. The answer is that there is not really any usual suspects, so to speak, with regards to month end and quarter end rebalancing. It will be different from month to month and from quarter to quarter, depending on how the value of assets has changed during that time. So remember that portfolio managers will have specific benchmarks set for their currency hedge ratios, or their predetermined currency exposure according to their portfolio composition and their allocation. So there isn't any usual suspect, so to speak. It all comes down to how much asset values have changed in the month or during that specific quarter. Now, investment banks often have very specific month-end currency rebalancing models that generate signals on where the strongest rebalancing is most likely to take place in terms of the G10 currencies. Now, these models are more complicated than they might seem because they don't only look at the currencies that moved the most or the least. It also takes portfolios into account, which means that it looks at a wide range of asset classes, equity performance, for example, by market cap for all the major currencies. So all of this means that without a very accurate investment bank rebalancing model, it will be difficult to establish the potential flows on your own by just looking at the major currencies itself. Now, the good news is that certain investment banks will often notify their clients when they're expecting certain potentially large rebalancing flows, and some banks also release the info on a sell side, which can give us good insight into what we might expect from potential month end or quarter end flows. The big question is, how can we use this information in our trading? Now, as we said, without the model, we need to rely on the investment banks and the analysts sharing the information with us, which means that it's not going to be a consistent flow of information that we're getting. Secondly, because we only hear of possible strong selling or strong buying of a particular currency, without the actual model, we don't know just how strong the expected buying or selling will be. And that makes it a little bit tricky to try and profit from these type of moves. However, when we've had, huge moves in terms of volatility during a month, really high cross asset class movements, these types of rebalancings are often going to be a little bit larger than normal and can create more sustainable moves. So usually traders will, look at the last trading day of the month at the London fix for these moves to play out. But oftentimes, the market can move before the fix in anticipation of a very strong rebalancing flow at the end of the month or the end of the quarter as well. So if a couple of investment banks are seeing the same thing, it makes sense for them to actually front run the move and get ahead of the expected move to capitalize on that expected moves, either up or down in those currencies. Now, from a retail trader perspective, it's always going to be a little bit of a gamble because we don't know for certain when the moves are going to be specifically linked to rebalancing, how much it's going to be, especially if there's other catalysts in play in the market as well during that time. It might be a little bit difficult to make a strong call on the type of move. So it's good to be aware of, especially if we're actively trading one of the currencies that are expected to have strong flows, whether it's out or in. So definitely something important to keep in mind, but not something that you'll be able to necessarily profit from consistently month in and month out.